Welcome to Speidel's California Minute. I'm your host, Catherine Zidane. This week we're covering how gross income from tiered LLCs impacts the LLC fee calculation. For an update on everything that happened during the year and tax planning strategies for 2024, attend Speidel's Federal and California Tax Update. There are live seminar and live and on-demand webinar options to choose from, and you can get full details at caltax.com. An LLC with California source income in excess of $250,000 pays an annual fee based on the amount of the LLC's total California source income. Total income is defined as gross income plus cost of goods sold. In a tiered structure, a parent LLC owns one or more subsidiary or lower-tier LLCs. The definition of total income for purposes of calculating the annual fee excludes allocations or attributions of income to one LLC from another LLC if that income was already subject to California's annual LLC fee. When completing Form 568 Schedule IW, Limited Liability Company Income Worksheet, do not include any amounts that have already been reported by another LLC to determine its fee. However, the FTB may determine the LLC fee based on the total income of a tiered structure if it determines that multiple LLCs were formed for the purpose of reducing LLC fees. Also, the total income of a parent LLC includes the total income of a subsidiary LLC if the subsidiary's income was not subject to California's LLC fee. But this may not be as straightforward as it sounds. If the distributing lower-tier LLC did not pay a fee on the income because it was below the $250,000 threshold, the upper-tier LLC can still exclude the income, even though the lower-tier LLC's fee was zero on its total income of less than $250,000. Because the income was already considered to be subject to the fee, the income is excluded from the total income of the upper-tier LLC. You may have to make manual adjustments because tax software may not automatically exclude a lower-tier LLC's income when computing the Schedule IW. If the software simply copies the amounts from the Schedule B to the Schedule IW, you'll have to make a manual adjustment to exclude this amount from the upper-tier LLC's total income when computing the upper-tier's LLC fee. Also, the lower tier's cost of goods sold and deductions are excluded from the amount listed on the upper tier's cost of goods sold and deductions on Schedule IW lines 3B and 3C. The upper tier LLC is not required to file a statement computing the exclusion of lower tier LLCs it has a direct or indirect interest in. The FTB will be able to determine if the lower tier LLC was subject to the fee from information provided by the upper tier LLC. Questions S and Z on Side 2 of Form 568 are for the LLC to report its ownership interests in entities classified as partnerships, including other LLCs, and disregarded entities like single-member LLCs. When S or Z is checked yes, the LLC needs to complete the relevant parts of Schedule EO, pass-through entity ownership. Speidel's analysis and explanation of California taxes is the most complete and best-priced California tax guide available, and it includes periodic updates for major changes that happen during the year. You can see the table of contents and pre-order the 2024 edition at caltax.com under Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.